Hello everyone. Today we're going to analyze Amazon, the company behind the largest e-commerce platform in the United States and a global powerhouse in cloud computing, logistics, and AI. In the third quarter of fiscal year 2025, Amazon delivered strong performance with $180.2 billion in revenue, growing 13% year over year. After accounting for its cost of revenue, the company generated $91.5 billion in gross profit, a solid 52% margin. Operating expenses reached $74.1 billion, including $29 billion for technology and content and $27.7 billion for fulfillment. Ultimately, Amazon reported $17.4 billion in operating income and $21.2 billion in net income, reflecting meaningful margin expansion driven by efficiency improvements and rapid growth in high-margin segments like AWS and advertising. This strong financial foundation positions Amazon well for continued momentum in upcoming quarters. Next, we look at Amazon's revenue mix in Q3 FY25. Online stores remain the largest segment, generating $67.4 billion, or 37.4% of total revenue. Physical stores contributed approximately $5.6 billion, serving as a complementary retail channel. Third-party seller services delivered $42.5 billion, accounting for 23.6%, and continue to be a core growth driver of Amazon's marketplace model. Advertising reached $17.7 billion, growing over 24% year over year, and now represents close to 10% of total revenue. Subscription services, including Prime and digital content, generated $12.6 billion, or about 7% of revenue. AWS recorded $33 billion, or 18.3%, remaining Amazon's most profitable business. Finally, other services contributed approximately $1.4 billion. Overall, this revenue structure highlights Amazon's shift toward higher-margin, service-driven businesses. Now, we look at Amazon's revenue growth trend across recent quarters. Total revenue increased from approximately $127.4 billion in early FY23 to $180.2 billion in Q3 FY25, representing an average growth rate of around 13 to 14% per year. AWS expanded from $21.4 billion to $33 billion, maintaining a growth rate of roughly 18 to 20% year over year. Advertising was the fastest-growing segment, rising from $9.5 billion to $17.7 billion, with growth of approximately 23 to 25% YOY. Third-party seller services increased from $29.8 billion to $42.5 billion, translating to about 12 to 15% YOY growth. Subscription services, including Prime and digital content, grew steadily at around 10 to 12% YOY, providing recurring revenue stability. Meanwhile, online stores and physical stores grew at a slower pace of roughly 5 to 9% YOY, reflecting their more seasonal nature. Next, we look at the development of e-commerce within total U.S. retail sales. The share of e-commerce increased from 8.7% in 2017 to approximately 18% in 2025 and is projected to reach 23.1% by 2030. The size of the U.S. e-commerce market expanded from $429 billion to $1,341 billion in 2025 and is expected to reach around $1,911 billion by 2030. Within this growing market, Amazon has maintained a dominant position with a stable market share of approximately 37 to 41% over many years. This indicates that Amazon continues to be the primary beneficiary of the long-term growth trend in U.S. e-commerce. We now turn to third-party sellers, one of Amazon's most important growth drivers. The share of third-party sellers in total units sold has increased from around 52% to nearly 62%, reflecting a shift away from first-party retail toward a fee-based business model built on services, logistics, and advertising. The total gross merchandise volume generated by third-party sellers on Amazon's marketplace grew from approximately $160 billion in 2018 and is projected to reach $519.8 billion by 2025, demonstrating the rapid expansion of this segment. Amazon currently has around 9.7 million seller accounts globally, but only 1.9 million are actively selling, highlighting the highly competitive nature of the platform. In terms of profitability, about 22% of sellers become profitable within 3 months, and most achieve profitability within 1 year. Selling through Amazon enables faster profitability, while traditional retail models typically require many years to break even. We now highlight key improvements in Amazon's delivery operations and AI-driven shopping experience in Q3 2025. Over the past 4 months, Amazon increased the number of rural communities with access to same-day and next-day delivery by 60%, significantly expanding reach beyond urban areas. Same-day delivery for perishable groceries is now available in more than 1,000 U.S. cities and towns, with plans to expand to over 2,300 locations by the end of 2025. On the AI front, Amazon saw strong adoption of Rufus, its AI-powered shopping assistant, with 250 million customers using it this year. Shoppers who use Rufus are 60% more likely to complete a purchase. Amazon also launched Help Me Decide, an AI feature that helps customers identify the right product based on browsing activity, searches, shopping history, and preferences. In addition, more than 1.3 million independent sellers are now using Gen AI tools to create high-quality, engaging product listings. Finally, Amazon expanded multi-channel fulfillment to sellers on Walmart, Shopify, and SGIN, enabling brands to reach customers wherever they shop while leveraging Amazon's fast and reliable fulfillment network. Turning to the digital advertising market, global digital advertising revenue is expected to reach approximately $767 billion in 2025, with continued steady growth in the years ahead. Within this landscape, Amazon's advertising revenue is estimated at around $69.3 billion, ranking behind Alphabet and Meta, but well ahead of other major platforms such as Microsoft and Alibaba. A significant portion of Amazon's advertising revenue comes from retail media in the U.S. The U.S. retail media market is projected to reach about $62 billion in 2025, accounting for nearly 20% of total U.S. digital advertising spend. Within this segment, Amazon controls approximately 77.3% of the market, driven by its direct access to purchase data, precise shopper targeting, and ad placements close to the point of purchase. Walmart ranks second with roughly 7% market share, while the remainder is split among retailers such as Target, Kroger, and smaller platforms. This highlights Amazon's dominant position in retail media and its ability to turn advertising into a key profit growth engine. We now highlight the key developments across the Amazon Prime ecosystem in Q3 2025. Subscription revenue reached approximately $12.57 billion during the quarter, generated from Prime membership fees, digital video services, and audiobooks, supported by Amazon's large and growing Prime customer base. Amazon currently has around 184 million Prime members in the United States and more than 250 million members globally, underscoring the scale of the ecosystem. Prime Day delivered a significant revenue spike, generating approximately $24.1 billion in just 4 days, representing more than 30% year-over-year growth. On the content side, Prime Video reaches approximately 200 million customers worldwide, including 115 million customers in the U.S. Content performance remains strong, with the Summer I Turned Pretty Season 3 attracting over 70 million global viewers within 7 days after the finale and delivering 65% higher viewership than Season 2. Thursday Night Football kicked off its 4th season on Prime Video, averaging 15.3 million viewers, the highest average for TNF on any network in over a decade, and a 16% increase versus last season. Amazon also debuted NBA on Prime in more than 200 countries, delivering an average U.S. audience of 1.25 million viewers during the season-opening doubleheader. In addition, Amazon expanded its Prime Video add-on subscriptions to include over 100 channels and launched the reimagined Luna Cloud gaming service, including game night, at no additional cost to Prime members, further strengthening engagement across the Prime ecosystem. We now look at the rising share of streaming within total TV viewing time. In the U.S., streaming share has increased significantly, from approximately 36 to 37% at the end of 2023 to nearly 47% by November 2025, highlighting a continued shift away from traditional television toward digital platforms. Within this landscape, Prime Video has maintained a relatively stable share of around 3 to 4% of total TV viewing time, reflecting its role as a complementary offering within the broader Prime ecosystem rather than a platform focused on maximizing share. Looking more broadly, market share is largely concentrated among major platforms, with YouTube leading at over 12%, Netflix around 7 to 9%, and Hulu and Disney Plus each in the 2 to 4% range. Next, we turn to the global cloud infrastructure market, which continues to expand rapidly. Total spending on cloud infrastructure has grown from approximately $41 billion per quarter in 2020 to nearly $107 billion by Q3 2025, driven by rising demand for cloud computing and AI-related workloads. Within this market, AWS remains the global leader with a market share of around 29%, although its share has shown a slight downward trend as competition intensifies. Microsoft Azure follows closely with a market share above 20%, while Google Cloud ranks third. Despite increasing competition, AWS continues to be Amazon's most profitable business and a core pillar of its long-term growth strategy. Next, we look at how AWS is leading the AI and cloud computing wave in Q3 FY25, with a strong focus on infrastructure, AI platforms, and real-world business impact. On the infrastructure side, Trainium 2, AWS custom AI chip, is now fully subscribed, has become a multi-billion-dollar business, and recorded 150% quarter-over-quarter growth. Built on this foundation, AWS launched Project Rainier, a massive AI compute cluster containing nearly 500,000 Trainium 2 chips to train and deploy Anthropic's Claude models. At the same time, AWS introduced EC2P6 EGB 200 Ultra servers powered by NVIDIA Grace Blackwell superchips, designed for training and deploying the largest and most advanced AI models. At the platform level, Amazon Bedrock continues to expand with new foundation models, including OpenAI, DeepSeek, V3.1, Qwen 3, and the latest versions of Claude Sonnet, Opus, and Haiku. AWS also introduced Nova multimodal embeddings, enabling unified, high-accuracy search across text, documents, images, video, and audio, alongside web rounding to improve response accuracy. For developers, Kiro, an agentic coding environment, attracted more than 100,000 developers in its initial days, while Agent Core became generally available to support secure and scalable AI agent development. Finally, AWS is delivering tangible business impact. Quick Suite, an agentic AI application, significantly shortens execution time and reduces operating costs by over 90% for complex tasks. Transform, an AI agent for AWS migrations, has already saved customers 700,000 hours of manual work, equivalent to 335 developer years. In addition, Amazon Connect has reached a $1 billion annualized revenue run rate, handling 12 billion minutes of AI-powered customer interactions over the past year. Alongside technology advancements, AWS continues to scale globally by adding 3.8 gigawatts of power capacity over the past 12 months, launching a new AWS region in New Zealand, and signing major enterprise agreements worldwide. Next, we highlight several key strategic milestones for Amazon in Q3 FY25. On the consumer AI front, Alexa Plus continued to scale rapidly, with customer engagement more than doubling compared to the original Alexa. On Fire TV, Alexa Plus usage increased by 2.5 times, driving 4 times more content discovery and shopping interactions. Amazon also launched 4 new AI-powered Echo devices and expanded Alexa Plus across Fire TV and Ring. For long-term infrastructure, Project Kuiper expanded to over 150 satellites, demonstrating downlink speeds above 1 gigabit per second, and secured commercial agreements with major partners such as JetBlue. In automation, Zoox began offering a fully autonomous robotaxi service in Las Vegas and expanded testing to Washington, D.C. On workforce and logistics investment, Amazon announced an additional $1 billion investment in U.S. employee pay and benefits, raising average hourly compensation to over $30. Launched Future Ready 2030 with a $2.5 billion commitment to skills training for 50 million people, and outlined plans to hire hundreds of thousands of seasonal workers while investing $1.9 billion more into its delivery service partner program in North America. From revenue of $180.2 billion in Q3 FY25, Amazon generated $17.4 billion in operating income, in line with the same period last year. However, this result includes 2 special charges, consisting of $2.5 billion related to a legal settlement with the FTC and $1.8 billion in estimated severance costs. Excluding these items, operating income would have been approximately $21.7 billion, reflecting continued strength in Amazon's core profitability. Within this, AWS remained the primary profit driver, delivering $11.4 billion in operating income, up from $10.4 billion in the prior year period. At the company level, net income increased significantly to $21.2 billion, or $1.95 in diluted EPS, compared with net income of $15.3 billion and EPS of $1.43 in the same period last year. Results were further supported by $9.5 billion in pre-tax gains from investments, primarily related to Anthropic. Overall, Amazon demonstrated its ability to maintain strong profitability even while absorbing short-term special charges. Next, we look at Amazon's net income trend and margin expansion over recent years. In 2022, Amazon reported a net loss, with net margins falling to around -3%, driven primarily by elevated logistics and fulfillment costs following the pandemic, excess warehouse capacity, and valuation losses from equity investments, most notably Rivian. These factors placed significant pressure on profitability during that period. From 2023 onward, net income recovered sharply as Amazon restructured its fulfillment network, strengthened cost discipline, and benefited from operating leverage. By Q3 FY25, net income reached $21.2 billion, while the net profit margin expanded to approximately 11.8%, the highest level in several years. This indicates that Amazon is placing greater emphasis on profitability, with an increasingly important contribution from AWS, advertising, and subscription services. Amazon's operating expenses show a steady upward trend over time. Within the cost structure, technology, and AMP, content has grown the fastest, with a compound annual growth rate of approximately 14.1%, driven primarily by increased investment in AI, cloud infrastructure, data platforms, and digital content. Fulfillment costs have also grown at a relatively high pace, with a CAGR of around 10.4%, reflecting the expansion of the logistics network, faster delivery capabilities, and greater automation across fulfillment operations. In contrast, more traditional operating costs have increased at a much slower rate. Selling and AMP. Marketing expenses have grown by only about 2% per year, while general and AMP, administrative expenses increased by approximately 3.6%, indicating tight control over sales and administrative spending. Overall, the cost structure has shifted toward technology and infrastructure, with expense growth remaining lower than revenue growth over multiple years. From FY22 to FY25, Amazon's reported revenue has generally tracked closely with or slightly exceeded estimates, indicating a relatively stable revenue outlook. For Q4 FY25, net sales are expected to range between $206.0 billion and $213.0 billion, representing 10% to 13% growth year over year, reflecting continued confidence in Amazon's revenue scale during peak periods. In contrast to revenue, actual EPS has shown greater volatility, particularly in FY22, when several quarters came in below expectations, highlighting pressure from costs and profitability variability. Estimates for FY25, FY26 remain elevated, reflecting expectations of stronger earnings, while EPS remains sensitive to cost dynamics and non-operating factors. Investor sentiment toward Amazon stock remains strongly positive. Based on the latest consensus from 63 analysts, the average 12-month price target is around $297, implying approximately 22.6% upside from the current price of about $242. The bull case projects a target of $360, representing roughly 48% upside, while the bear case stands near $250, indicating limited downside of around 3%. This range reflects continued confidence in Amazon's long-term fundamentals, particularly driven by AWS, advertising, and operating leverage improvements. In terms of analyst ratings, the prevailing view is strong buy. Among 74 analysts, 61 rate the stock as strong buy, with a smaller number assigning buy or hold ratings and virtually no sell recommendations. This distribution suggests broad institutional support and optimistic expectations regarding Amazon's earnings outlook and strategic execution. Thank you for watching. The information presented in this video reflects opinions at the time of publication, is based on sources believed to be reliable, and is provided for informational purposes only. It does not constitute investment advice or a recommendation.